Welcome to another Monday session. We are the foundation for the study of cycles. My name is Lars von Thienen, and I welcome you here every Monday, once a week, to a session, a short talk on cycles. We will review some active data sets. We will focus on market data, and we will use digital signal processing algorithms to see what the current status quo of cycles using digital methods and the procedures we provide to our members will show us. So please feel free to join us here for the next 20 to 30 minutes to have a short update on market cycles. What's in it for you today? So today, in the first section, as always, we will just browse over some main markets and just check what the active cycles show us, so that you are aware of the active cycle component. This is not a market forecast. This is just an information about the status quo of cycles in these markets. You can use this information for different purposes if you're new to this channel. So that's the first 15 minutes. And then in a second topic, I will review about two key main topics just shortly. One is about the cycle harmonics, which we discussed in the last session on last Monday. And we have a great follow-up in our forum here based on a member on cycle harmonics. And I will just quickly bring this up into the show to give you some more insights and a follow-up if you are interested on harmonics and cycles. And third, it's just more an announcement at the end of the show, because this is often requested. How can we bring in intraday data sets for analysis with the now analysis version? I will give you a short announcement on what will follow up, what you can expect. I'm going forward this. And then finally, but not last, we will spend some time on your questions. So I would like to see your live questions as I will now move through the show, and I will always have an eye on your questions so that I'm happy to answer your key questions here live in the session, as this is the chance once a week to have a live chat about your important questions. So that's it for today. Let's jump into it. Let's first move to our standard view on cycles. If we move to our dashboard, which everyone is able to use by his own. So no, this is not a secret application. This can be used by every member of the foundation. And I think if you're already a member, you are familiar with the usage. If not, this is what is available just to check the main market cycles here. So today, let's go over the main markets. I will use the dashboard here as a starting point, just to check in. For example, what's always interesting, if you're interested in the main markets, what's about the sentiment or data sets which help us to derive cycles and sentiments. So therefore, we have one section in the dashboard which highlights basic data. You can use other data sets for sure. That's just a good starting point to start with. So the volatility index is one key data set which has a lot of cyclic nature and gave us in the past a lot of information here. So right now we see that there are smaller cycles in this data set, but in general the volatility index is moving down, which is in parallel with the market still moving up. So what are the key cycles in the volatility index? If we go to the spectrum chart, we see the key cycle of 245 days, which clearly stands out in the spectrum. So this is what digital signal processing provides us with the key information about. The key cycle in the volatility index has a length of 245 days. This is one information about the length of the important cycle. The second one, what we need to draw now the cycle below the data set, is the phase of this cycle. So where we are in the ups and downs of this detected cycle here, which is shown here in verbal explanation here on the chart, like this calls the uptrend neutral, which is just a verbal expression of the mathematical phase of this cycle. But that's the basic information we derive from the spectrum. If we want to plot this cycle on our data set, we just move here up to the table. We've seen from the spectrum that this, from an amplitude point of view, has the highest amplitude. It's not just listed at the top of this list, because this list is sorted by strength. But the most important cycle here is clearly with the highest amplitude, still a good strength score and a very high Bartle score. So therefore, this is the starting point to start every cycle analysis with. You see it's aligning here with the key timing information. As always, cyclic information is used for timing, not for price projections. So what you look out once you have the cycles detected is what it gives you in case of timing information. So and therefore I will just quickly give you the basic information. So if you move here into the past of this cycle, you need to check that if the tops of the data set are in alignment with the cycle tops and the lows are in alignment with data set lows. So this is what we can observe here in this data set. So just for the new starters here in this session, let's just visualize what I'm trying to talk about here. So we connect the tops, which is here, with this high here. So this is the connection here, the low in the data set with this low here, and the high in the data set, which is here, and then the low with the data set, which is here, and then the high, which is here. So this is the normal deviation, which is anyhow a load, as you will never see a perfect match of tops and bottoms here in the markets with a theoretical cycle, because what we're plotting here is kind of standard cyclic information. And then once you have more or less from a visual point of view, get confirmation about that, at least what's using is the data set from the past to detect the cycle, which obviously here in this case is active in this data set. We never know if this cycle will be active moving into the future. I mean, we can't read the future, but what we have is from a digital signal processing analysis perspective, a high valid information that this cycle was active in this data set. And now what you always will do once you have this information, which is shown here, you always look out for the next important turn on this cycle projection here. So even though you can project a cycle into the future almost indefinite into the future, it does not make sense to do these kind of static cycle projections. So once you see a static cycle forecast for, if you use daily data, a year or 2 years, just crash it, because it does not make sense to have this long-term static cycle forecasts. Cycles move in regards to length, amplitude, and phase. So you always need to update the status quo of the state of the cycles, even though they might change their nature just a little bit in length and phase. It might be a huge difference in regards to the next important timing point in the future, because phase just might change a little bit, length just might change a little bit, and then the next projection point might change based on that. So that's what markets are about. They are not static. Cycle influence here is not static. So, but using this information here, we would look out for this point in time, which is here, beginning of August this year, projecting a top in the volatility index. So it would now project an increase in volatility, so an increase in the fear index would be equal to an declining market. So this is how we read this sentiment data here. So we have passed already the projected topping point here, but at least for sentiment data, you see that this information is never up to the point. So you can't trust the cycles anyhow for exact day-to-day timing, at least not from this sentiment data set on daily data, just using the last 2 to 3 years. But it gives you an indication about what the sentiment is projected to do. So this is the key projection here, which we could expect just following the volatility index. At least we could see a sideways move. So what happens in strong uptrends, what we are still in. So if we would assume that the strong uptrend is still intact, and we see this kind of rising volatility, which might lead just to a sideways market. So, I mean, this is what we're currently observing for the last, I think since, let's check this point here. So since April, end of April, yeah, the second half of April. This is moving up here from the sentiment project, which in a sideways market should move to an starting downtrend. In a strong uptrend, this could lead then to a sideways market. So this is the view on sentiment and how you read sentiment data. Then the next point is you should look out for what are the cycles telling you in the main market. So as we have looked on the volatility index for the S&P 500, let's now open this data set here. This is what I said is in line with the sentiment data. We've seen that it looked like that by end of April, which is what I'm showing here, by end of April, the volatility cycle bottomed and is now moving upwards, which in normal sideways market would lead to a downtrend. But as we are still in a very strong uptrend in the main markets, what we see in the market is now that this results in a sideways moves. Yeah. So therefore, you always need to take into account that cycles are based on a kind of detrended view on the markets. That's also the second important key information you always need to take into account when you deal with this kind of cycle projection. And this is what I'm telling with this story. So we are still in a very strong uptrend here, which is not broken, at least if you just use the last 2 to 3 years of daily data to analyze this market. And what we see now is what is in line with the volatility sentiment data, that this market is moving sideways since end of April. The reading just from the sentiment data showed us that this period could continue until August. Yeah. So this is now, if we transfer the reading from the sentiment data, which bottomed in April, could lead into a sideways procedure until August. So, okay. So that's just using the sentiment data. What's now important, never trust one cycle projection on its own. You need to have cycles within cycles and cycles within cycles alignment, meaning different cycles align with their tops and bottoms, which gives you more valid information on the markets and to follow. So therefore, we also do the cycle analysis here on the S&P 500 itself. The derived dominant cycle length here, taken from the spectrum analysis, has lengths of 238 days. So if you remember, I think we have 240 something on the volatility index. So this counts as the same cycle in regards to length. Even though there is a difference of 5 to 6 days, it's still the same cycle length. And why? Because there is no other cycle around. If you look on the spectrum, there is no cycle with a length of 240 or something. So there is just one cycle. And if I say one cycle, there's just one peak in the spectrum. So you read the spectrum by looking for the peaks. And here's a clear peak at the length of 230 something. And so this is the same if you would use 245 on the volatility index. What this is not showing here from the length alone is where we are on the phase. So it could be completely different in regards to cycle phase. So therefore, we can now plot this cycle also on the price chart, which is more or less telling us the same story here. So first of all, we can always check then in the historical view how this cycle worked in the past from a timing perspective. Yeah. So therefore, I will just highlight here. We have the top, the low. Here we had an high, then moving into this low, then moving into this top, where we have the alignment, then moving down into this market top, the cycle low here, then moving up here to this top, and then maybe we are in a very strong uptrend anyhow, so we skip this low here and during the last downturn phase. So if this uptrend continues, what we've seen, and therefore let's cross-check this with the last downturn of this. So this cycle is valid in the past if we look at the data set. If we now zoom in as we had the last downswing, and this is now a kind of cyclic seasonality or the current status quo. During the last year, the bottoming cycle here resulted in a very powerful upswing here. Yeah, so if we see just this period here, which is in alignment with this cycle phase here, the bottom, then it really pushed up. So after this point in time, when we reached the cycle top here, you could argue then a little bit, then at least, yeah, we still moved up, but there was then also a sideways period. Yeah, if you just connect it from here to here, or even make it a little bit larger here, so that you see, and this is what the story I want to bring across for today. So during this down period here, when the cycle moved down, we just made a top here. And if you just then make a sideways move, at least from the pricing, then we moved down, then we moved up. But if you count this whole period from here to here, the price has not really changed a lot. I mean, from a daily perspective, there have been other opportunities on smaller time frames. So this is then a great opportunity to move on a lower time frame, because now from a daily perspective, it looks like we are in a sideways market, which has a lot of opportunities for swing trading on lower time frames, because the strong uptrend has been stopped during this period. But once we reach this point here, so then maybe let's change the color here. So once we reach this point here again, from here, we had then the next upswing here, which was the same from here to here. So if we read how the behavior from this cycle was last year, there could be a chance that this will now move into another sideways period, yeah, from here into August, which is what I'm showing here. So as moving back lower into the past, this resulted into downswings in the markets, which I showed you. But in the last year, the down phase of the cycle pushed at least the uptrend to pause into a sideways movement, which started now since end of April. So we don't see a huge move down, which always needs an external trigger, by the way. So if we see an external trigger now coming in this cyclic down phase, the markets could move down very quickly. But if there is no external trigger now which pulls into this cycle, at least the uptrend is stopped until August. That's how, I mean, I can't do a market forecast here, but this is the reading of the cycle analysis, taking the dominant cycle into account from the sentiment data set and the S&P 500. So to sum it up, from a cycles perspective, we could see a still sideways market until August. Then the cycle changes into its key upswing period, but we should update our analysis until this point in time anyhow. Okay, so that's the main analysis if we look at the main markets we had for today. Yes, and I'm just looking at your questions right now. So, and to bring in one of the questions to mix it here also into the session is about, would be nice to see the name of the data set somewhere on the price chart. And I agree, because you don't see the name of the data set here, right? So I clicked it in the beginning, and you might see it here in the upper section of the browser here in the URL. But I agree, at least it's not easy to follow if you just have a look at the data set. So thanks for this suggestion, Tony. I will bring it in. So this is a clear, very good improvement, and should have been done anyhow already. But yeah, this will show up, but that's the key point I wanted to make for today on the main market. So maybe let's bring in another data set just to complete this analysis. So for example, what you're interested, commodities. like silver is in a nice cyclic move here right now, so, or at least the uptrend ended last summer, by the way, which we called in the financial summit last year. So the next summit is around the corner, and now, moving kind of in a cyclic sideways moves here. So let's see. There's one cycle standing out, looking at the spectrum of silver using the last 3 to 4 years, 181 days, which is also the strongest one with a good Bartle score. So therefore it's here on top of the list. That's why it is selected here. And always, and I can't repeat it often enough, because that's important to understand, at least if you're a beginner. This is no indication for price movement here. This is an indication on timing. So this is where the top is, which is correct. Then moving into this bottoming here, which is here on the price chart. Then moving up here into this top, which is in alignment with this cyclic top here. Then we see a similar situation here. So this downtrending phase resulted more in a sideways, slightly up downtrend here. And then this bottoming here into this topping of the cyclic top here. Then this low moved here to the market. Here's the cyclic low, then the next upswing to this point here, and the next downswing here, and the upswing. So this is how to read the cycles from a timing perspective. Even if there is a large deviation in the absolute amplitude, this will even change if you zoom into these more close up into the periods here. So where you can see that now that here we have the top and moving into the bottom and moving into the top here, right? Okay, this is just for the new starters here on cycle analysis important. This is the timing information here. And we showed anyhow the topping and the bottom period here, so that we are now, or still from a longer term perspective, this is now the question. If we now get more into a detailed cycle analysis, this is an interesting example, because even though we followed this cycle here, what happened here now in this situation, if we move closer to the current behavior here, the projected low is here or the low to be in May, starting of June, while the market low was from this cycle here. So we have a deviation of months or so in this data set. So the question is, has the bottom already now bottomed earlier than the static cycle or projection, which can always be the case. We just don't really know yet. So we need to have additional confirmation or additional data sets to confirm if there could be the low. And in general, this could also then relate to that this top here might come in more early. So I'm using this phase shift here for this cycle, more to the left. This, and you need to be aware of that the top could be then even become in beginning of July here. So we should be very have a close look here on this period if the cycle has shifted now more in the current past, because what was used for this cycle projection, this is also important to understand, is that we use the full in-sample period, which is here labeled in dark blue, to align the cycle on the full in-sample period. So it's not optimized on the current past. This cycle is plotted on the in-sample period, which is shown here on the bottom. So therefore, it might not be the best fit looking at the current point in time. You can tweak this now. So this is now more where the advanced stuff or the advanced cycle analysis comes into play. For example, you can tweak the let me check a little bit here, the post-processing. So the cycle which we have seen so far has an cycle phase, and the cycle phase has been derived from the overall in-sample period used. That's the selection here of the average cycle phase. So the average cycle phase over the full in-sample period is used then to plot the cycle into the future. What we can also choose from the sections here in the settings panel, and even though in the basic version here is, you can switch to current cycle phase, which means, and this is what I told, that instead of taking into account the average phase of the full in-sample period, let's now more look at what's the phase in the current past of this cycle. So not taking the full 5 years into account. So this is more an average fit of this cycle on the full on the cycle full data set. We take the same length. So the length will not change, by the way. So we use the same cyclic information of the full data set. We will not shorten the analysis time frame. So it's still the same time frame used for the analysis, just for deriving the phase of the cycle. So where we are in the ups and downswings here, we just use the current path. So this helps us in tuning the phase where we are in this cycle today. So we can forget about where the cycle phase was 3 years ago, because it doesn't matter anyhow. The cycle will move a little bit. So taking the full data set to get the cycle length. We won't change this with this setting here, but now switching to current cycle phase, will tweak or not tweak, we'll just use the most current data to derive the phase status of this cycle. So I will just press update. And let's see, I think it's a minor change here, so it's not a real change here. But this is now how we would continue to analyze this data set. The next step would be to get into the other detected cycles here, which are not so much, but now selecting the most dominant one and look into these cycles which have a harmonic relation towards the most dominant cycle here. And the harmonics can be derived just manually by dividing by 2 or multiplying by 2 or dividing by 3, multiplying by 3. So from a mathematical perspective, that's not a challenge here. So we can visualize this here also with the harmonics module, which in this case, selecting the one with 181 gives us the 95 length cycle and the 61 cycle with the harmonics of 2 and 3, which we then could activate also on this cycle, which gives then a slightly optimized view here, and the 61, which would then give us a reading of that there is a smaller cycle which is now maybe responsible for this smaller upswing here, which we currently see, where we already see that this has stopped here, and this downswing, there are 2 readings now for this period here, so which is this one here. Yeah, so this period is then a smaller cyclic down move here. It could result, as we are in this larger up cycle here, a sideways move, so that we keep moving into the beginning of June, maybe then next week with a sideways move, but then at least afterwards it shows like that this upswing cycle here will continue then into early August. Yeah, so that's then more the advanced way to bring in additional data, which in general means that we have seen this major cycle here, just taking the one cycle into account, doing this projection here, or the phase shift where we might expect the cycle low becoming more early here. So interesting is what's happening in the next week, where we might see the continuation of the sideways move here, and then again getting back into this larger upswing here, where we could expect then the top in August, something in August. So if we disable these shorter 2 cycles, this is what makes the longer term cycle in a more detailed breakdown, what you can expect on a shorter term move. So the overall topping here in August is anyhow seen by the larger cycle here, and bringing this down with the 2 related harmonic cycles here might give you a clue on the interim period. So taking this period here as a sideways downwards move here, and then switching again into the uptrend phase here for July or mid-June into August. Yeah, let's see how silver behaves. You should always cross-check this with gold, as gold and silver often have main cycles in sync. So, but I will leave this now up to you to make the same analysis on the gold markets. Okay. So that's it, at least for the first section of today, to give you some updates on main market cycles. So even if you just follow this weekly series, I hope you like just to review some cycles. The second point is now that I want to give you some updates on first what we discussed last week. And I won't go into the details here, but I would highly recommend to move to our forum section. And we discussed last week. So Mark, if you are here yeah, you are, Mark. I think I see you joined us also today. And we discussed this last week, Mark. So thanks a lot for bringing this into the forum section as a follow-up on harmonics. So you made a great primer and explanation on what are harmonics, what is the harmonics theory, and some basic harmonic relations, mainly referencing the work of Hurst here in this case. So therefore, I would recommend everyone to reach out to this forum topic here in our Cycles Foundation, go through the explanation which Mark just shared with us, and the relations which are mentioned here are mainly related to the findings by Hurst, and have then taken down into intraday cycle analysis also by Thienen Trader, which is the company running here by David Hickson, which is also doing great work on the Hurst cycles here. So we won't discuss any relation here, but it's just important to understand. So if someone talks about an 18-year, 9-year, or 20-week cycle, this is just the name of the cycle. Yeah, so it does not mean that it's exactly 18 years, that it's exactly 20 weeks. This is just the cycle name. So when you read about we have a 20-week cycle running, this does not mean we have the exact 20-week cycle. It's the name of the cycle. And by research, these cycles then have an average cycle length, which is here listed. So on average, the 20-week cycle is about 19 point or something weeks. And if you then do your digital signal processing on this data set, you will see that maybe it's 18.2 weeks right now, which is okay. Yeah. So therefore you can see then maybe the digital signal processing gives you an 18 point something week cycle. This will then be the 20-week cycle with an average cycle length of 19 point something at least. So there you can now then fit the current digital detected cycle with the average cycle length and the cycle names. And then you continue with the ratios which are listed here. But in general, as you can see, the Hurst cycle, there's always a relation of 2 to 1. So you divide it by 2, and then you get to the next cycle here in this list. So the 40 days, then divide by 2, the 20 days divide by 2, then the 10 days divide by 2, then the 5 days. So this is the main ratio, which always Dewey and Hurst used, a ratio of 2 and 3. In the main markets, it's found by Hurst. It's also supported by Dewey's analysis. That's why we put these ratios in our harmonics modules, and you can quickly find these harmonic relations. And last but not least, it's not only, Mark, that you put the story here in the forum. There was then also a colleague, let me know if you're here, which then also did an idea on long-term cycles with this list here. So there was a real analysis on the long-term view of the S&P. Yeah. So what you did of 150 years, and it's there in the ideas section. So if you want to check it, this is nothing secret. It has been shared here in our ideas section. So you can move to the ideas section on your own. And the idea is here named, it's maybe not easy to spot, but the name of this idea here is SPX year, month, day cycle study. So maybe it's not self-explaining, but this is the study here where the forum entry referenced, and you can even open the explanation page of this idea here. So there has been used 150 years of data, so therefore it's anyhow interesting because you won't often see such long-term data sets. And then you use the composite cycles found in this cycle chart with some explanations here you put in this idea here on top, so I will not go through everything. But then you pick the weekly cycles here, so which resulted in this forecast here. It's a very long-term forecast, but you can see what the forecast is telling us here. So there are really interesting long-term cycles at play here. And in addition to that, you explain them in this forum here. So this is the same analysis you're referring here to, why these cycles have been picked. And you made a great calculation about converting the month, which have been detected by the cycle scanner, converting it into weeks, days, and also years. So you can see the yearly cycle, the weekly cycle. And what you now start to do is you look for the harmonic relations, which you already started to put in here. And now you can start, which goes then beyond a digital signal processing. You can see, for example, the 7-year cycle has a lot of different meanings in other relations, and also the 21-year cycle here. So now you can see the cycles not just in days or years, so you can now see if there are connections to maybe other reasonings or cycles which don't come from market cycles. Yeah, you can now go into the list of Dewey detected common cycle lengths in lots of data set. So once you did your analysis, like done here, what I just share here, you can now go into the library and check, okay, is the cycle of 7 years, is this a common cycle not only in market data, so also maybe in other kind of data sets like weather, biological cycles, planetary cycles, whatever. And if you see then relationships, that makes this cycle even more important for your analysis, what you did here. Okay, so thanks, Mark, a lot for bringing up this follow-up information to the community, which helps understanding the harmonics topic. And then finally, a next topic, which I promise to provide next week, because I know that you all want to know how to bring in more intraday data for your analysis. So I will promise you that we are working on making it more easy for you to just bring in your intraday data. And I will give you an answer on how this looks like next week on Monday here. So even if I don't show the exact details, I know that you need more information on this, and I just tell you we're working on this and you will get more information on this. The only thing is you need to take in mind, we will not provide intraday data sets. So you need to bring in your own data feed connection, but it doesn't matter what. You maybe have an existing data feed with whatever data feed provider, with your TradeStation account, with your Ninja Trader, with your CQG account, whatever data feed you have, I will show you a way how to bring in your data feed and instead of just exporting and importing all this manual procedure, how to make it more easy to bring this up. So, okay, so therefore, we hear your requirements and we will improve our services to do that. And next week, we will have a clear message on how this will look like. Okay, so final session. Your questions, my answers. So let's now move to your questions and answers. No, I will try to bring in answers for your questions. Okay, so I think today there are not too much. So maybe one example, Mark, Bitcoin has been following the moon phases recently. Check out my post on the forum. Yeah, maybe, Mark, thanks for contributing so much content here. So I think I mentioned your Bitcoin idea some weeks ago already. But at least if it worked out so well, let's just, you did a detailed review in the forum. So, whoops, I just need to log in here. So I think this was a deep dive into Bitcoin. So there, Mark, this is your review on the cycles in combination with moon cycles and the idea on the idea board here. So just thanks for bringing this up. I think we don't have the time to dig into that today, but at least I agree. It's a good point to review that. Is it possible to post the link of the discussion about harmonics by Mark, please? Yes, for sure. Give me a second and I will send the forum link here in our discussion. So here it is. I think it's part of the application discussion here in the main section. So there are more entries now already. So this is the Cycles app forum section, and there's an entry about harmonics, and I will post this now into the live stream so that you can review this on your own. So here you go. Okay, yeah, could people maybe get more active on it? Yes, I would recommend you all, please. I mean, the forum is a very new area, which we just recently started to bring back to life. We are there for moderation, but it's a membership forum. So it's not a forum where we want to push out something from our board. It's something where you should discuss. So please join the forum, raise your questions. My colleagues are there in the forum, so it's not only about the application. It's a lot more about cycles. So Ray, our science director, will take care of each individual topic there. I will monitor the cycle-related question. So Mark, I just support your request. Please get more active on the forum. I think this will help us here even get more engaged in the topics. Okay, Roland, Bitcoin, we cannot find this clear cycles in the spectrum, which means there is no clear cycle detected. Right. So first of all, as discussed, please check the moon phase cycle idea, which Mark shared in the forum. And second, maybe then finally, to close this session with the question for today, or with your question as final question, let's have a short view on Bitcoin. And yes, if you get a very noisy view, was not about Bitcoin. Yeah, okay. So then, sorry, my question was not about Bitcoin. I'm asking about the spectrum. If I don't find an isolated, clean, identified cycle, the scanner. Okay, so sorry if I just went too much into the Bitcoin topic. Yes, if so, your assumption is right. If we don't see a clear peak isolated from other cycles in the spectrum, or if we see too much peaks showing in the spectrum, then there is no clear cycle, at least no cycle which can be accounted for driving the price. There are too much cycles active in parallel, which, by the way, is often the case. So in general, there are always more than one cycle active in whatever data set or data you analyze. And maybe even above 50%, you might not be able to derive the most dominant cycle, because they might all sum up in a kind of composite, and then the dynamics change within this composite. So then even it's hard to use a composite out of different cycles. So what you always should look out is if or there's one way you can try to use out if you see too much cycles in a spectrum, which I will show you then here maybe as a final answer on this one. And this happens in most cases if you use a very long historical data set, for example, over 2,000 or 3,000 data points in your analysis. So therefore, I will just try to load more data here for silver. I don't know. Yeah, we have lots of more data for silver here. So, and I will reset the range. So now, yeah, this is what happens. We have now taken 17,000 data points for the cycle analysis of the silver data set here, which results in 50 years of daily data for silver. I will not do an real analysis here. I will just show you what happens now with the spectrum, what you might be referring to. So there are lots of peaks now in the spectrum, which will make it quite hard to know what is the key dominant cycle now driving this market. And this is the case if you have 50 years of data. There are different cycles active at different points in time. So the spectrum analysis is correct, but it won't help us in today's situation, which is the most interesting cycle today, not 30 years into the past. So key topics to overcome this situation here is that in the scanner section, we have it's already activated. So if you start with the basic spectrum, it will even look more cluttered here. So give me a second. So it gets even more cluttered here. So if you see pictures similar to that, you won't be able to derive a cycle for your analysis. And the main reason is maybe you use too much data points. In this case, you need to apply the second way to do the scanning, which is the average power spectrum, and then add spectrum smoothing. We don't smooth the data set here, which will introduce lag and false signals here. We did some advanced spectrum smoothing, which will reduce these thousands of peaks anyhow. So it's a little bit clearer, but not clear enough to derive a cycle here. You could start now then with one or two standing out. So the 2, 4, 9 here in this case, I don't know, let's clear it first. Why is there a cycle selected, by the way? Yeah, and then start with this one here, and then go with the harmonics of this main cycle here, then mainly to at least check out the current point in time here. So using the 2, 4, 9, but there's no harmonics involved here. So that's analyzing 50 years of data on silver won't give us a clue on the current cycle right now. And this might happen maybe in regards to your question. So if you don't find the isolated cycle analysis won't help you in doing any projection and forecasting. And that's the way how the world works. There is not always one simple cycle. And this is what makes cycle analysis, by the way, a fascinating science, because we always have the challenge that we see, at least from a digital signal processing analysis, different possible cycle combinations which we can use, and no one has found the single answer to which cycle to pick. At least we from the foundation try to provide support, help, and knowledge how to pick these cycles. That's the purpose of this session here. So also we don't have the answers on everything, but we want to share a little bit the knowledge and try to give you some answers on how to apply cycle analysis so that you get better with your knowledge on cycle analysis, and we as a community can share our experiences here once a week or on the forum. So I would say that's it for today. Thanks for joining me again. I hope you had some additional insights on cycle analysis, and I would like to see you next week, same time, same place. Cycle analysis, as always. See you next week on Monday, and have a great week. Bye.
Hello, I'm Dr. Richard Smith, the Chairman and Executive Director of the Foundation for the Study of Cycles. I hope you enjoyed our presentation. I'd like to ask that if you're not a member of the FSC, that you consider joining so that we may continue to bring you high quality cycles analysis research and programs like this. If you're already a member, of course, thank you. Would you please consider making a donation to the FSC? We are a not-for-profit organization, and your donations and membership fees are tax deductible. Every dollar that we bring in goes to further the vision of our founder, Edward R. Dewey. Together, we can make a real difference and bring these critical reports and analyses to the next generation. Thank you for standing with the FSC, and see you next time.